Why not dividends? I feel like common guidance is misguided. Looking for input. So for perhaps 11 years I've had my life together enough to know to save for retirement. To set the picture, my job and my spouses have plans that are guaranteed, but you can only put aside so much. We then discovered IRA and max it. My kids have 529s. Over the last 3 years I was in crypto but also started single stock investing. I have built a portfolio over the last 2 years of about 34k in higher dividend stocks. No less than 6 up to 14 with a mix of about 9.5 of current value. Now some pay monthly but most quarterly. So the last several years have been nuts. My IRA that I have maxed for several years has seen a total return, through Vanguard, of 8.6 over the last 6 years due to the ups and downs. Dividend stocks also go up and down but they pay you. So good example is I have a stock that I purchase $10 a day. Currently it sits at just at 10 if dividends continue. This stock I am up 0.02 today but it has paid me 11.3 in dividends which I used to buy other stocks and more of this stock. I have that money, it's mine. It's working. Whereas growth doesn't actually compound. At the end of 2021 my IRA was up over 16k, it's now only up about 8.7k. So that money has actually done nothing for me over the last 2 years. I've actually just lost money and due to inflation it's worth even less. My buddy said dump in VU which I have and my IRA is a similar product from Vanguard. That's my point though, the dividends pay me now. So I can reinvest it and I'm actually gaining. If I plan to hold 15 years I just care they keep paying dividends not what the price is day to day. Is this wrong? Total return is what matter. After all the receive and reinvest dividend, does it beat VU? If it does and you confident it will be in the future, why not dividend? However beating VU long term is considered hard even for pro, so a fair warning. IW just stumbled on the holy grail of investing. Taxman. The dividend you receive will result in the stock ETF price to decline the same amount. It's not free money as many people think. You get taxed on that also in taxable accounts so the tax bill could add up. Yield chasing is not a good idea. Look up dividend traps. If you're reinvesting the money back nothing is changing versus owning a non-dividend stock value is moved from share price to holders back to share price. If you're using the dividend it's a decent way to keep your cash flow consistent short term. You pay for this stability with higher taxes though. Dividends are one of the misunderstood parts of investing. Wall Street knows this, Main Street fights it. The posts here are the evidence. Dr. Jeremy Siegel has done the most comprehensive research that I know on the subject of performing asset classes over the past 200 years. His conclusion? High dividend payers have outperformed the market by a wide margin over the long haul. If you are looking for growth, invest in dividend stocks. If you are looking for income, invest in dividend stocks. If you are looking for safety, invest in dividend stocks. You're on the wrong sub lol. Lots of anti-dividend people here. Dividends are also taxed at regular income. Depending on your tax bracket, this is a real yearly drag in the sense that if you are in the highest tax bracket, you are paying close to 50 taxes each year on your dividend. Painful. 10 of annual growth no dividends compounds exactly the same as 10 of annual dividends no growth assuming full drip. Keep multiplying your starting position value by 1.1 and it will be the same exponential snowball growth in both cases. The div advantage is that you get to decide whether to drip everything or spend some. The div disadvantage is that you will be taxed on the full div amount regardless of what you do with it. Be ready for tons of posts explaining to you how dividends aren't free money as if anyone ever thought that money was free. We all know it has to come from somewhere geez. Edit also be prepared for links to Ben Felix's YouTube videos. Edit 2 on cue. So you're actually better off investing in Qs, SP 500 etc. Then when you get close to retirement, move the money you think you will need to live on to div stocks. Div is handy once you need to draw on the account. If you are looking for peace of mind, dividend stocks are the answer. Find a stable portfolio, with a nice yield and stick to it. No headaches, no buy-sell too often. Nothing is better than a little helper in your monthly income. I am not greedy, could not care less how much people are making on their Tesla or Meta. I want stability in money flow, and that's what dividend stocks do best. I've thought about this recently too. If you own a part of a company, which is what stocks supposedly are, shouldn't you get a portion of the revenue? That's what dividends are. But what about stocks that don't pay them? How am I a partial owner of a company if I am not reaping any profit from that company unless the overall value of the company increases and I sell my ownership? That's not how business ownership works. Right? I guess this is probably a newbie question and one I should know the answer to by now, but I've never thought about it before until recently. Dividends? More like dividends, but seriously, do what works for you and your investment goals. Dividends are a useful way to grow your capital. Ideally, you get some growth, some cash, which you can then invest into pure growth. I think there are a number of good investments USD CAD that pay between 2 and 4. The Canadian market is saturated with 3-5 dividends banks, for example. BRK invests heavily in companies with strong dividends. Warren Buffett opposed dividends for a long time. To his way of thinking, he should be able to deploy profits to generate more profits. Shoveling it back to shareholders is an admission that the business isn't going to grow, has run out of opportunities. So, oil and gas companies are on the decline as we move to a carbon-free world. They're pushing dividends out because investing to grow their business will result in massive sunk costs when their product is outlawed. I have also read other comments. I am not even sure VU is the optimum ETF to park one's money anymore. Yes, it is a low-cost ETF, but there are better indices these days. All these indices need years of accumulation before one sees their intrinsic value. You are exactly right, dividend investing allows you to ignore stock price and keep compounding with reinvested cash flows. The dividends can also be used to support you and pay expenses as an alternative source of income during hard times. I personally like a mix of VIME depending on your international exposure preference. I like the FTSE high dividend yield indices as they keep it simple, rather than other indices that try to use elaborate smart beta screens resulting in higher portfolio turnover and trading fees. You don't gain anything when a dividend is distributed to you. Your account still has the same amount of money. Bogleheads have overrun this sub and will do anything, including downvoting and repeating known falsehoods, to pretend that dividend investing is stupid. It's because they are full of angst, as passive indexing underperforms dividend investing in down and sideways markets. Which it also does all the time, absent tax drag. Cue the debunked Ben Felix clickbait videos and free money strawman. This sub is obsessed with tech and high-risk stocks. This works great in a money-printing environment that we have had since 2008. Dividend stocks do well during inflationary times, historically. Reinvesting dividends is a net positive. No one says dividends are free money, but they are a good diversification. I like dividends because it concrete my investment strategies and make me feel rewarded and have less swing because they are meant to distribute. There's also several dividend ETFs that have performed better over the last 30 years. In a factual statement, there is no difference, but like anything, putting a "you need to pay this over this time" constraint on a business helps them motivate to perform, in my opinion, and I don't invest in div stocks currently, but there's nothing wrong with growth focus. Dividends are given when a company doesn't think that reinvesting in itself for more growth is possible. It's a sign of weakness when reaching a more mature state yielding less returns. I stay away from those. Only total overall returns matter, dividend or not. Dividend yield is a distraction, and the higher dividend it goes, the more unsustainable it is.